So the stocks and shares ISA is one of the best things to happen to UK investors pretty much ever. However, it is very often misunderstood, and I think most people don't understand the true benefit of the stocks and shares ISA. So in this video, I'm going to go through the Trading 212 ISA and explain to beginners as much as I can the benefits of having one. So as you can see, this is my Trading 212 stocks ISA. Obviously, if you wanted to, you can open a stocks and shares ISA with a number of other brokers. I prefer Trading 212 myself because of its extremely low fees, and genuinely for me, it is the best platform and I have most of my money in it. If you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, all you have to do is to click the link in the description box down below. Alternatively, if you've signed up to Trading 212 in the past 10 days and haven't received a free fractional share, all you have to do is to click the 3 horizontal line menu over here. Scroll all the way down until you see this section, use promo code, and then enter my special code JUBAIR and you should receive a free fractional share. So the first thing to note about a stocks and shares ISA is that it is an ISA, so an ISA standing for individual savings accounts. Now, you may have heard of this before. High street banks like Barclays, Halifax, they often provide an ISA. Typically speaking, the most popular ISA is the cash ISA. So basically, banks will give you a savings account where, you know, no matter how big it gets from your interest, you're not paying any tax. Typically speaking, also these banks will rip you off with very low interest rates. The other option is to have a stocks and shares ISA, which means the ISA part means that it's tax wrapped, meaning that no matter how big your investments or your cash within your ISA grows, you will not be paying tax when you withdraw. And that, my friends, is the power of the stocks and shares ISA. However, as simple as it is for me to understand, a lot of you get confused about the stocks and shares ISA, and in particular this thing over here called the ISA allowance. Now, it's important to know that the ISA allowance is shared between all the different types of ISAs, like I said, cash ISA, lifetime ISA, innovative finance ISA, but each tax year running from April to the April's next year, around April the 6th to April the 5th, that's called a fiscal or tax year, you are allowed to deposit a maximum of £20,000. And by far, this is where everyone gets confused. I receive daily comments about this. So let me please just clear that up. You are allowed to deposit a maximum of £20,000. You have no obligation to max out your ISA. I know some very fortunate people like myself are able to max out our ISAs. £20,000 a year is a lot of money to be putting in, and I'm very grateful and fortunate to be able to do that every year. Of course, the more money you put into your ISA, the more potential it has to grow because you're working with larger numbers. But if you only had £100 each month, you know, that's £1,200 a year. That still is going to go a lot further than doing nothing with your money, provided of course you don't put it into a stock that goes down, but we're not talking about that right now. So I really like the fact that Trading 212 actually explains these terms for you. So let's go into what it says here. What is an ISA allowance? So like I said before, ISA stands for individual savings accounts, and they typically let you save cash tax free. Now, the stocks and shares ISA is different because not only can you save in cash, but you can also pick your own stocks or ETFs, which gives you access to a potentially larger selection of assets that can grow your money faster, but with the additional risk of, you know, investments. Whenever you are investing, your capital will be at risk, and there really isn't anything saving you if an investment that you chose fails. It's really all on you. Now, within an ISA, the annual limit is £20,000. For most people, you won't get anywhere near £20,000, but you know, there are a few lucky individuals that can do that, and for them, they worry more about the ISA limit. But for the average person, the ISA limit is so high, I wouldn't worry about it. So this is how the ISA allowance works. So you have £20,000, which is the maximum amount you can contribute to your ISAs. Remember, if you put in 10k into a cash ISA, you can only put in 10k into a stocks and shares ISA maximum. If you put in £4,000 to a lifetime ISA, again, it's going to take away from your £20,000. It's going to take away from your £20,000 per tax year allowance. So if you have a stocks ISA and a cash ISA, you can't contribute together more than £20,000, of course, per tax year. So now there is actually no restriction on how you can split the £20,000 allowance. Previously there was, but now it's very easy. You can put in £19,999 into your cash ISA and £1 into your stocks ISA if you wish. Now, a lot of people get confused with this particular point I'm going to be talking about right now, and that's the £20,000 allowance. And the wording allowance, I admit, is actually terrible because it sounds like that is the maximum limit you can have within your ISAs, which is completely untrue. Now let me show you this. So this is my Trading 212 Stocks ISA, and you can see my current value is £115,500, well above £20,000. You can see in the past month alone, I have a rate of return of 5.7%. And that is a real world gain of £6,241. So basically, because these investments are within my ISA, so they're tax wrapped in my ISA, it can grow to £1 million, it can grow to £20 million, and everything I withdraw is going to be tax free for life, although realistically the government could change that and get their hands on your money, maybe. That being said, that's just pure speculation. With Trading 212, however, the stocks ISA and the cash ISA are flexible, which opens a whole world of possibilities when it comes to, investing and having that £20,000 per tax year allowance. So with your Trading 212 ISA, you can withdraw and deposit back throughout the year without it affecting this allowance. For example, previously, if you deposited £20,000 into your ISA and you needed, for example, £1,000 from your ISA because of an emergency, you take out the £1,000, but you can't put any more in that same tax year because you've used up your £20,000 allowance. However, now with the Trading 212 ISAs, they're flexible. So basically, if you deposit £10,000 into your ISA and withdraw that £10,000, and then you try to put that £10,000 back, it won't affect that £10,000 allowance, meaning that previously, if you had taken £10,000 out and then put £10,000 back in, you would have used your maximum £20,000 per year allowance. But now if you take out £10,000 and put it back in, the allowance used will only be £10,000, which is actually really, really good for a lot of people. This allowance is based on the net deposits per tax year. So basically, if you put in £20,000, you take out £20,000 and then you put in £20,000, that'll be fine. So just in case you didn't know what net deposits meant here, net deposits is the total amount deposited minus any withdrawals you've made. And now Trading 212 makes it very easy to see your net deposits. As you can see here, net deposits again is the difference between the cash you've deposited and the money you've withdrawn from that account. My net deposits is quite high. That is because I've done an ISA transfer from another provider, and to date I've maxed out my ISA for only 4 years. So all I've put in was £80,000 and I'm up by quite a bit, by £35,000 so far. I am very happy with my ISA performance, and the best part of this is that I can build my wealth long term by putting it into a stocks and shares ISA. And hopefully one day it can grow to £1 million, and I will rest easy knowing I can use that for my retirement. I plan to retire early, so if I have £1 million, hopefully I can take out about £3,000 to £4,000 per month without it affecting my ISA long term. In other words, the ISA will keep growing whilst I still am able to take out money per month. Of course, the stock market has immense fluctuations, so I can't be relying on a constant stream of income every month if I don't want to affect my portfolio long term. So make sure to check out some of my other videos, and I'll see you in the next video.